Welcome back to the channel. My name is Vandell, co-founder of Black Swan Capitalist. So today I'm going to talk about what comes before and after a bull run. But before I talk about that, I just want to dive really quickly into the recent market correction that we saw in the crypto space. So keep in mind that we could see more of these corrections. I'm expecting a lot of volatility between now and election time. Additionally, we could even see a market crash, which is more significant than a correction. So just expect the unexpected. And the reason I'm bringing this up is because you should not get shaken out by BlackRock and the big whales. Ultimately, the market makers want to liquidate people and they want to shake out as many people as possible before they send these markets to the moon. So there are several key indicators and factors that are actually unfolding that are setting the stage up for the coming massive crypto bull run that we're going to see very soon. So first of all, the global M2 money supply is increasing. The global liquidity index is on the rise. Central banks are beginning to lower rates. China is ramping up its economic stimulus. Billions of dollars from FTX distributions are coming back to people that invested previously and lost their money. And elections are around the corner. And God forbid, war. Hopefully it doesn't escalate that far, but that actually might have a shock in markets. But ultimately, it's an excuse for central banks and banksters to create more credit, issue more debt into the system, and ultimately spend more and create more money. And that makes its way into the markets and the economy and drives asset prices higher. So these developments will be a pivotal role in driving the bull run that's coming around the corner. Now, what happens before and after a bull run? So this is extremely important, and to answer that, we first need to take a step back and zoom out. I always like to zoom out and look at things from a macro perspective and look at the cycles. Now, understanding the big picture is crucial, and it begins with knowing the 4 stages of the market cycle to see where we are and get a good sense of what comes next. So, why is knowing what comes before and after a bull run extremely important? It's simply because when you can identify the 4 stages and you know where you are in the cycle, you have a powerful edge. This basically allows you to determine whether you need to be more aggressive or more defensive in your investment strategy. So in other words, whether you should be buying, holding, or selling. Now, without spending too much time right here, I'll just list the 4 stages of the cycle really quick. The 4 stages of a market cycle are the accumulation phase, the markup phase, the distribution phase, and finally the markdown phase. After the markdown, the cycle resets, once again returning to the accumulation phase. And remember, each stage of the cycle offers unique opportunities and risks, so be aware of that. And if you've recognized that we're in the accumulation phase of a cycle, or at the bottom of a cycle, which is a stage that comes before the bull market, a more aggressive strategy is generally a smart idea. This is where prices pretty much have bottomed out after a downturn or a major crash, and it's a period of low market activity with very little price movement and action. It's when smart investors actually begin buying undervalued assets while the broader market sentiment remains pessimistic and there's fear, and people think it's never going to do anything. Really, at this point, this is when bears and people that don't believe in the market, they're just staying out and they're actually wishing they never got involved. But when the bull market comes, everybody and their mother is wishing they bought more. This is interesting because, it requires a contrarian mindset to invest at this stage of the market, as it goes against the consensus and the masses. If you know that you're in the early stage of a market cycle, It actually allows you to anticipate where the market's headed and strategically position yourself for the next coming bull market. Now, during this phase, assets are undervalued or oversold, and limited buying activity from the public because everybody is fearful and not confident enough to actually get back into the market. And this is the best time to buy. However, the few smart investors and institutions and venture capitalists, insiders, whales, often referred to as smart money, this is the stage they begin accumulating undervalued assets or oversold. Now, recognizing the potential for substantial gains and the market starts to recover, they already accumulated and they're just sitting patiently at this point. It lays down the foundation for the coming bull run, and it's the first stage. Now, rising prices and renewed optimism will start to come back in, but this is as we get closer to the beginning of the markup phase, which is the bull run. Now that we covered what comes before a bull market, which is a bear market, that's the actual term for it, it's important to identify what comes after a bull market so that you know how to strategically prepare and take the right actions, because the truth is no bull market lasts forever, okay? Just get that through your head. Nothing goes up forever. And important point to make and to remember is that any asset class can move from an accumulation phase to a bull market and then turn into a bubble. And sometimes the bubble can grow into an even bigger bubble before it bursts, but eventually it will. No bubble lasts forever, and we all know that. So eventually the market will cool down or crash, and you might want to take some chips off the table. So the next phase in the bull market, where the early entry often leads to the most significant gains as positive sentiment starts to increase and abundant liquidity drives asset prices even higher. During this period, basically what you see is markets experience rapid growth while certain asset classes, benefiting from heightened investor enthusiasm and more liquidity coming into the market. However, as the market reaches its peak, a more defensive strategy becomes essential. Now, this is typically the time to consider adjusting your portfolio or exiting certain positions to protect, a lot of your investments against, some inevitable correction that's going to come at some point, or a crash that follows normally an overheated, inflated market. Now, what comes right after the bull market? That's the distribution phase, which is the end of the uptrend. This is the end of the bull market in simple terms, which then leads into the markdown phase and a period pretty much categorized by, declining prices and a market correction, to say the least. By this time, again, as I said, the bull market's over. Why is this so important? It's important because the last thing you want to be doing is selling during this stage and taking a loss. It would be ridiculous, but unfortunately, it's what most investors do. So recognizing these stages ahead of time allows you to make informed strategic decisions and avoid being blindsided by a market downturn or a crash, as most investors, happen to experience. By planning for the phase that follows a bull run, you position yourself to navigate the cycle with foresight and confidence because you know what's coming next. Now consider this. Bitcoin during the 2017 to 2018 market cycle, just as an example. Let's say you were trading it. After a long period of relatively stable prices, the accumulation phase, Bitcoin entered the markup stage in 2017 and it soared from under $1,000 to nearly $20,000 by the end of the year. During this time, media hype and new investors flooded into the market because the masses are always late to the party, very typical. The distribution phase occurred as Bitcoin hovered near its all time high, with early investors selling their positions and using retail as exit liquidity. Then, in 2018, the market entered the markdown phase or crash, where Bitcoin actually lost about 80% of its value over the course of 1 year. And investors who understood the cycle knew where we were and they knew what was coming. So they probably took profits during the peak of the bull run and the distribution phase and avoided any steep losses that came afterwards, while those, the masses, held on through the markdown stage. They experienced significant losses and decline. Now, I'm not telling anyone what to do with their money, but if you're in this market to profit and you want to take advantage of the 4 year bull run cycles that are extremely repetitive and predictive patterns, and they happen every 4 years, then you better have an exit strategy and know when to be getting out of the market, when you should be buying. And it doesn't matter whether it's a small portion of your portfolio or a large portion. You need to know when to get out and when to exit. So, in conclusion, understanding each stage, especially what happens before and after a bull run, is extremely crucial so that you can navigate the market cycles and avoid emotional decisions, stick to a plan, and position yourself to actually make life-changing money in this asset class. Hope you guys like that. If you guys do like these kind of videos, please let me know in the comments. Subscribe, like the video, and I'll be making more of these. If you do want to speak to me one-on-one, I do offer consulting calls, one-on-one calls, and so does my brother, Versan Aljarrah. So just visit our website or reach out, and we'll be happy to speak with you and provide some sort of perspective and guidance. Thank you, and I'll catch you guys later.